Hello and welcome to our webinar series, the Tokenization of Securities. My name is Chris Berg, host of the Sound DeFi podcast. This is a webinar series of 9 different webinars. This is webinar number 3 that we're going to have for you today with some very special guests, as you can see on your screen here. What's exciting about this series is we've teamed up with some great partners like the ones today, and in the future here, you're going to be able to have a chance to hear from Blackstone, JP Morgan, Coinbase, Goldman Sachs, Cushman Wakefield, and many, many more. So thank you for taking some time and joining us here today. If at any time during the conversation you've got any comments, questions, just please put them in your comment section there on LinkedIn or YouTube, and we'll be happy to answer those at the end of the webinar. I want to introduce the person here first who had the genesis of this idea, put this entire thing together, the CEO of Inveniam, Pat Ownera. Pat, thanks for doing this and great to see you, my friend.
Hey, it's great to be with you, Chris. Thanks for hosting this. And I want to say thanks also to Ami and Chris and Bruce and Matt for joining us. We really appreciate it. And we're excited for today's webinar.
I want to go around and introduce each of our guests and then give them a chance to just introduce themselves and really talk about this, the problems that they are solving within the space. Just so you know, today's webinar is titled The Tokenization of Securities, Alt Funds Back Office Efficiencies, and Connecting Assets and Funds to Digital Instruments and Reporting Tools. So let's start with Ami Ben David. He's the co-founder and CEO of Ownera. Ami, it's great to see you again. Thanks for joining us. And
Thank
just
you.
give you a chance to introduce yourself.
Hi, so my name is Ami. I'm the founder and CEO of Ownera. I've been in the tokenization space from the very early days. I was a VC, and me and my partners decided to tokenize our fund and ended up being the world's first fully tokenized fund. And that was a few years ago. And then we also remodeled the fund to actually invest in the space. So I invested in multiple companies and helped found some companies in the space. So quite early on in the space of tokenization, and I've seen how the whole concept of tokenization has come a very, very long way from nobody knowing what it is to a point where, you know, the CEO of Goldman Sachs is talking about it, the CEO of JP Morgan, the CEO of BlackRock, and they're all talking about tokenization. So it's great to see how far this industry has gone in the last few years, but we're only in the beginning. And I think 23 is the year that things are going to get serious.
That's great to hear. Also joining us today, Chris Toom. He's the global head of digital products with Apex Group. Chris, great to see you, and thanks for joining us today.
Hi, Chris. Nice to see all of you today. So I'm from Apex. My role is looking after our digital products. That's where we surface our technology, but also more importantly, what our clients want to use through a set of digital applications, of which clearly tokenization is going to be absolutely central to that going forward and feeds into the entire ecosystem that we provide. Apex is a asset servicer focusing on alternative assets, but actually more broadly across a wider area of financial services. We've got about 3 trillion of assets under administration, and we're servicing our clients in about 45 different countries.
Thank you, Chris. It's really nice to have you with us. Bruce, you had so much fun last time. You came back to join us, so we appreciate that. Again, Bruce Jackson, he is the Chief of Digital Asset at Apex Group. So Bruce, welcome back, and just give you a chance to introduce yourself, sir.
Yeah, so Chief of Digital Assets at Apex. Basically, we, as Chris mentioned, we have 3 trillion in administered assets, but all of them are alternative strategies. All of our clients are either hedge funds, private debt, private equity, private real estate, infrastructure funds. My role is dealing with that existing group of GPs and helping them do what is not the impossible, is very possible, which is lift their entire infrastructure onto the blockchain so they can sell more product. Our clients sell their product to institutions and to accredited investors. And the next wave is to embrace the huge distribution capabilities of all, from the biggest banks on down, to deliver this alternative product into a broader base of clientele. My background is entirely asset management. I joined Apex after having been a client for 4 years. I previously built an alternative asset management firm allocating or working on behalf of foundations, pension funds, etc. And it's been a long journey for me in introducing alternative assets into more investment balance sheets. Look, tokenization, the digitization of this process, is not just the next stage. It's a quantum. It's going to enable an immensely broader base of investors to have a better investment balance sheet. That's the objective. I very constantly focus on our asset manager clients and how are we going to make them able to sell more product to their client base through transparency and liquidity.
Bruce, welcome back. It's really nice to have you and hear from you again. Also, Matt Appel is joining us today. He's the Managing Director of Fund Administration Services with Inveniam. So, Matt, give you a chance to introduce yourself as well.
No, thanks, Chris. Glad to be here today. So, I've been in Inveniam about 2 years now, and my role is focusing on our fund administration clients like Apex, as well as our general partner and manager, private asset managers, general partners, asset owners, and institutional clients in general. Previously, I worked at State Street on both the asset servicing and asset management side, and have been focused mostly for the last 25 years on alternative investments, and really see the push into tokenization, transparency, liquidity for private markets this year really coming to the forefront. And we're happy to be part of that progress into the tokenization of private market assets through Inveniam and through our platform, Inveniam.io.
Pat, again, just want to say thank you for being able to bring these visionaries together of where this industry is headed. And so, Pat, it should be a great webinar. The floor is yours, my friend.
Thanks so much. It's great to have so many people who are really working on the digitization of the capital markets. And particularly what we want to focus on is the disparity between the public and private markets. And historically, there have been tools to create steps, typically maybe 1 or 2 steps in between the public and private markets, and that highly efficient public market and this inefficient private market. And funds have been mechanisms where people can invest collectively, they can have broad exposure, but it is illiquid, it's tied up for a long time. And there's really not a yield curve between the public and private markets. It's a yield cliff, right? That literally the cost of capital is dramatically different. And what we're doing is creating, through price discovery and transparency, the mechanisms to create steps between these, and then eventually a yield curve, where that yield curve may not even be on an axis which is denominated by public-private. It may be by geography, risk, alpha, and just where you're going. And the better data and better price discovery is going to create new mechanisms for alternatives to have price discovery, automation and administration, delivery of data to investors, real time, secondary markets, and new primary forms of distribution. And Ami, as you said, you've been at this really from the beginning, right? And I'd like for you to talk to us about the genesis of Ownera, right? You told us the story a little bit, but I also want you to maybe focus a little bit on alternatives, right? What kind of space is alternatives going to play in tokenization? Is it going to be first? Is it going to be second? Is it going to be last? Right? And today's talking about alts and tokenization. Tell me about your journey, where you see alts and tokenization as a driver, and then maybe a little bit about how Ownera works within an ecosystem where you're creating an ecosystem and plugging into an ecosystem. That was a couple questions.
Yeah, quite a few. So yeah, in terms of the journey, I think that when we started doing tokenization of a small VC fund, the technology itself came from the world of crypto, from blockchain. That's where we were kind of starting. But very, very quickly, I understood that these are completely different markets. Although they share some kind of blockchain technologies, they're very, very different from each other. And what I realized was that in order to get tokenization to its full potential, we must go to the institutional market. rather than the retail or other kind of markets. We had to go institutional, and institutions just didn't know how to deal with tokenization because they didn't know how to issue, how to sell, how to custody, and so on. So the whole infrastructure was missing to begin with. So when we brought Ownera together, we looked at the market, and the first thing we realized was because tokenization is so much more complicated than traditional digital assets that are traded on blockchains, there were a lot of tokenization platforms that were being created. And each one of them is dealing with the complexity in a different way, and therefore they were not compatible with each other. So the biggest problem we recognized at Ownera was interoperability. Basically, the ability to create one market with global distribution, global liquidity. And to solve this problem, we created a group, a nonprofit group that have been meeting practically every other month for the last 2.5 years. And this group includes all the big banks, all the big financial institutions, all the asset managers, the top asset managers, exchanges, and so on. And in this group, all those competitors were sitting down and were saying, okay, how can we create a network where everybody can trade with everybody? And that is where we came out with this open source protocol called FinP2P, which I'll talk about later. And this protocol enabled basically the market to trade. And on the basis of that, we created the company Ownera. So that's the history. But I'll say a few words about what we're actually doing in the market. What we're doing in the market is this. We've separated the process of tokenization into its components, okay? And we're allowing one entity to tokenize and issue an asset, and another asset to tokenize and issue another asset, and so on. And each tokenization solution focuses on a different asset class, on a different, some are doing bonds, some are doing funds, some are doing, equity, and so on. And all of them can publish their assets into our network, which is a single network, which then aggregates and unifies and normalizes all the data. And then we enable the destinations, the private banks, the wealth managers, the exchanges to consume a single API with all the assets from all the sources. And in doing that, we're creating a unified market where everybody can see the asset and can trade the asset. And I think that if you look at the components of this, you're seeing, first of all, the need to create the tokenization itself, the issuance. Alongside the issuance, a token is useless if you don't have data next to it. Ergo, Inveniam, where you can create all the data up to the minute, tethered to the blockchain and so on, and sit completely together with the token. Then those two are being published into the network, broadcast into the various places. And then on the other side, you see other providers, some of them providing settlement currencies, like stable coins and digital bank accounts, and in the future CBDCs. They connect as well. And then you see the exchanges connect, you see the private banks connect, you see lenders connect to lend against these securities, you see custodians connect to provide custody. And you have a network that can now bring to the private markets, the alternatives, the same kind of efficiency or even better efficiency than we've been accustomed to in the public market. So you can do a transaction at a click of a button. You can see all the information all the time. You can get dividends. You can do secondary trading. You can leverage and get loans. And you can do anything you want in a digital format in a market that before tokenization is basically manual. Every transaction takes weeks. Every transaction takes lawyer. Every transaction is unique. Those are tremendous efficiency benefits. But it's not only about the efficiency. It's also about distribution, democratization of access to assets. It's about liquidity. It's about new business models and revenue models, like, for example, lending and leverage. So, like Bruce said, this is a proper revolution, taking the private markets to the next step, to the digital world.
I really love the way you talk about the unified markets and the components working together in an ecosystem where we're delivering a solution for an outcome where there is a decentralized functionality. There is not a single solution, that we're allowing interoperability. So it really is kind of this ecosystem, right? And it's an ecosystem that's being developed where we're utilizing the strengths of many, many different players to gain broader distribution, broader access to the global capital markets for the individual entrant, but also for the investor, right? Where they're gaining that broader access. And if we just real quick as a follow-on question to you, tell me about when you think about who the best client is for Ownera, when you're out there saying, this is who we want to be interfacing with. This is the client that we can deliver the greatest value to today. Who is that?
So we work with two sides of the market. On the one side, we work with the asset providers, with the likes of yourselves, the big asset managers, the big banks, and so on, to take the asset that they have today in a non-digital form. They tokenize them, they digitize them. We don't care how we can help them, but there are many providers out there. It's becoming commodity how to tokenize. So they tokenize, right? And each one of them knows which products are best. And I can talk in a follow-up question about which asset classes and so on. But they tokenize. So we work with them to bring asset to the network. So that's the product side, the supply side of the network. And then from the other side, we work with the distributors. And I think the biggest opportunity today is distribution, because this market had a problem of a chicken and egg. You didn't have product, therefore you didn't have distribution. And because you didn't have distribution, you didn't have product. What actually happened over the last 9 months is that all the assets are starting to come on scale. So the product is there. And the reason the product is coming is because even if they didn't have a single layer of distribution, they still get the benefits of all the automation and efficiency gains, right? So everybody is tokenizing because of the efficiency gains. Now I have the product. The next big opportunity is distribution, is the ability for wealth management companies, private banks, exchanges to go to their clients and say, until now you could only buy, a Tesla and public products, or you can, go in and gamble in the crypto market, right? Here is the new alt market, or alternative market. The private market is now available to you, and you can mix and match, and you can invest very, very quickly, and you can get in and out of position, and you can borrow against them all at a click of a button, all with information up to the minute, provided by the likes of Inveniam. So that's the model. So for me, to your question, we work on the one side with tokenizers, all the banks that are tokenizing themselves, tokenization engines like Securities and Tokeny, Toko, and others, connecting to various blockchains and all of that. So that's one side, settlement providers and lenders. And on the other side, and that's our big push right now, is distributors, is those private banks, wealth management players, broker dealers, and exchanges.
That's fantastic. Ami, thanks so much. I noticed Chris, when you were talking about efficiencies, Chris was bobbing his head up and down, right? And when you were talking about distribution, Bruce was bobbing his head up and down, right? Because you were hitting, kind of each one in their world, kind of what they look at, and Chris, let me throw it over to you. Why do you think tokenization has particular relevance to the alternatives markets where you live, right? And are there efficiencies that bring companies into digital halfway to tokenization, and then the step to tokenization is just a short one? Or talk to us about those efficiencies that you were bobbing your head on.
Yeah, no, I think for us, it's around making that a gradual change. Yes, there are steps, as you were talking, to go through, but actually not going from zero to crypto, and also not sort of keeping that historic cryptocurrency association. So, we want our clients to be working, and initially working within existing regulation. There's existing regulation for unregulated and regulated structures in the alternative space. So work with those regulations. We're seeing clients create digital twins rather than necessarily a purely native digital token. So you still get the efficiency processes. You actually still have a token sitting behind operating across a blockchain. But actually what you've done is just standardize a process, and the official books and records are kept off chain. Now, what that means is you get those efficiency plays, you are building those blocks that you need. And, this is again where Inveniam comes in from. I've just talked about the liability side, but also on the asset side too. And eventually those liability side and the asset side will meet in the middle. And utopia, which we all hope and want. But actually getting to that stage, you've got those efficiencies. So, what we spend our time with our clients at the moment on is, standardizing the transfer agreements between, say, two investors in an illiquid fund, making sure that you onboard prospective investors like you would do in the open-ended world. In the closed-ended world, you have a set of investors that you're comfortable your fund being transferred in between. Or even we've got one client where they are using this internally within their funds to create some liquidity and to enable rebalancing of pension funds into alternative assets. Now, actually, that becomes really interesting when you look at the speed at which that can be achieved. So by working through that standardization, we've taken a process from 6 weeks down to 2 to 3 days, and the 2 to 3 days is actually just sort of practicalities and transferring cash and having the appropriate board meetings and governance that you need. It's not a technical limitation, but that is going to give the client a completely different level of opportunity, and the investment managers a different level of opportunity to start looking at the more interesting areas of where we hope tokenization actually ends up going, the derivatives, collateralization, etc. That the transparency then that you achieve through something like transparency of the asset side of a fund through the Inveniam platform provides you.
Hey, Chris, when we think about that, let's just get really specific on that, right? As you're looking at digital product, right, that you're delivering into your clients, and in some cases you're delivering that to them, and sometimes that is a response to their request, right, where they're saying, I have a credit fund, I need pricing more frequently, how can you help me automate the administration of this credit fund, this private equity fund, this real estate fund? Talk to us about the inbound requests that are efficiency plays that are laying that foundation for tokenization, right? What kind of requests, what kind of products are they seeing? Is it a pricing? Is it an automation of data? Is it price discovery? Is it using third parties? Waterfall calculation? What are these products that they're looking for?
So ultimately, it all boils down to something quite simple, which is access to information, and then more importantly for the clients, but eventually their clients as well. And I think it's critical to separate between the managers and then the investors as well, because there's different levels of transparency needed for each. Is transparency of or access to information in a timely manner, but access to information that is accurate. So you've used a credit fund, but I like to use a real estate fund. It doesn't really matter. It might be real estate debt. Say you've lent on a building and you want to be able to value that building, and you're going to value it based on something simple like square meterage, and it's a price per square meter. One of the most important inputs to that valuation is the square meter. And actually, you want as an investor, and you also want as a manager, to be able to ensure that that number hasn't changed. And at the moment, you use a RIC surveyor or a qualified surveyor to make sure that that building is that size. But what happens if that building is undergoing construction, and actually that has got you're increasing the usable asset that you have? That's going to have a staged payment, and you're going to see that asset coming online and that utilization increase, or even just the utilization of a building if it's leased. And all of that comes from data points that you get from underlying property managers and underlying surveyors. Now, what you want to value that asset and value it more frequently is have the most up-to-date information. So it's about dragging that information from underlying systems in the most efficient way possible. And thankfully, we've got away from the fax world. We now have PDFs and maybe an Excel spreadsheet, so we are doing marginally better. But we have that. And then it's about making sure the manager has access to that information to be able to change that valuation and make an estimate. Maybe it's not a precise valuation, but make their appreciation of value, and it will be their appreciation. But also then maybe surface that out to investors. And this is really where the digital product side of Apex comes in, because what we try and do is then say, well, actually, you present that information quarterly to investors or semi-annually. why don't you present it monthly as you get the stage progress reports from the underlying manager? So they're able to actually see and understand that that asset is growing, that asset, that valuation is changing, and how those models are changing. So I've used a really simple example there as a square meter is, because it's it is nice, simple, much simpler than a private debt instrument, Pat. So sorry for dumbing it down, but I think that what I try and do is demonstrate that, again, it's that ability to pull information through and associate it in future, or possibly not quite future as everyone may think, to that underlying token. So that's bringing that asset side that I was just talking about, and then the liability side of transferring that token through.
So Chris, yeah, Pat, sorry, Chris, just to follow up on that, when you look at the tokenization of a fund at the fund level, do you envision Apex providing daily NAVs, since the token will be relying upon a NAV to trade on a daily or even by minute basis? Is that something in the future you're seeing, that because of that daily liquidity in tokens, once funds are tokenized, they're going to need that daily information that's provided by Apex, and then the underlying information supporting that NAV that goes into your calculation?
So we already have traded listed closed-ended funds, and you have a portfolio of illiquid assets held within a closed-ended structure that is then listed on a stock exchange and traded daily, and therefore there's a daily NAV. The issue is the valuation is typically stale, because it's valued at the historic points. And so the valuation policy is the previous, it's based on the latest valuation from an external source. I think what will become quite interesting is where those underlying sources become more current and more active. And so those underlying sources, if they move from, quarterly to monthly to weekly, and you're able to look at the inputs of those valuations in a different way, then you'll be able to do it. I mean, Apex in itself, we're a large beast with a very a broad set of solutions. So we've got a valuation team and valuation models that service the liquid assets. I think you will get to the stage where you are building a model, and you will end up building a model that will be available for a period of time unless there's a trigger event. And as long as you've got the inputs coming into that model, and that model is arithmetically calculating it properly, you'll be able to provide that out. Now, valuation is a science, yes, but there is an art to valuation, particularly in the alternative asset space, and understanding where value comes. IPEV doesn't give you too much room, but there is judgment in there. And so that bounds between arithmetic purely and judgment is going to be something that we see as difference, but actually in every point of difference, that actually provides value, provides opportunity, and it provides value for people where they interpret inputs in a different way. And again, that's where the data transparency becomes so important, because if you've got the transparency of those inputs, you can see where the valuation difference can change. That creates an opportunity for value. That's where people will seek a trade.
Hey, Chris, I want to jump in there real quick. When we think about that, right, the auditability and traceability of the data itself that's leading into the computation that drives the valuation is important, not just immediately, but over time, particularly as we automate, because we all know there will be litigation. The ability to recreate that calculation in time is incredibly important, especially for large organizations. But so I want to talk about auditability and traceability of that data, and the use of blockchain to commute trust that this is the data, right? Because the data isn't on the blockchain. It's just a mechanism to commute trust that this is the right data that you relied upon, and it hasn't been altered since moment of creation, right? And then we use that to recreate. And so as we think about blockchain speeding auditability, speeding trust, speeding traceability, that's going to have more frequent marks either by the GP or a third party. And whether the trading is done daily or once a month or once a quarter, where you build a book for 6 hours and it trades for an hour, whatever it might be, because trading may not be minute by minute for these alts funds. But what you do is you do have minute by minute audit ability of the data points the moment they're created, right? and we're commuting trust using blockchain in that data that you're calculating and relying on and auditing. And I think all of that delivers up, as you said, greater trust in data. And so, Bruce, I'm going to throw it to you in a second on distribution. But Matt, I want you to comment on this. As we talk to people, how big a deal is the auditability and traceability of the data used in these calculations?
No, it's extremely important. They need to verify. So they had trust but verify, right? They need to be able to trace the data back to the original source, that golden copy, for those inputs that go into any downstream calculation or downstream reporting mechanism. So as we speak to our clients and our prospects, that is one of their top priorities is really transparency and auditability back into the information, and being able to take be able to make sure that that information is trustworthy. And the only way they're able to do that is through the actual linking of the information back to the original sources. And so that is one of the top priorities of our clients and prospects, and it comes up in every single meeting that I have.
Matt, thank you. Bruce, I'm going to throw it to you, brother. As we talk about efficiency, we talk about automation, we talk about trust in data and price discovery, all of that's opening doors to distribution and increased liquidity, right? Because price discovery and trust in data creates liquidity opportunities. It doesn't create the liquidity, but it opens the doors. It creates the threat of it, right? Because if you have good data and you have a third-party mark, the opportunity for a trade to occur is that door is open. Talk to us about where you think distribution and liquidity is going to come. When is it going to come? And how important is this to your clients and the GPs?
Yeah, I want to start where Ami was talking. So his network of big distributors, everyone from JP Morgan on down. But at the end of the day, nothing sells itself. We all know that. The distribution of product is the center of our whole philosophical commitment to growth. It just is. Every one of our GP clients wants to sell more product. They would love to to get something through the Ownera system and have somebody say, you know what, I can move $500 million of that fund in Singapore next month. But what is the gap between where we are and what we aren't? Well, at the end of the day, work backwards. We need regulatory development. We need markets that can trade volume in digital asset securities, because when you tokenize a fund, you're creating a security. We know this. So I saw there was a question on here about stable coins, specifically on I believe it was on
CBDCs.
Yes, sorry, it was CBDCs. We already have this in Switzerland. In Switzerland, if you're a member of the SDX and you want to theoretically sell a tokenized product there, other members can use this tokenized Swiss franc where the funds are actually held with the Swiss National Bank. Let's get back to distributors. At the end of the day, they charge the biggest fees in the whole value chain because they access the end client. They can take our GP clientele with all the wonderful things that we are collectively doing for them, helping them administer and structure and maintain compliance with regulatory and other regimes. But they're going to sell the product. They're going to help them grow and generate better balance sheets for their end clients. So the distribution angle really is, it's sitting there, and it is going to become the hub. It's going to become the absolute central focus of everything we do soon enough, just as it is now for TradFi assets. So what are those distributors doing? Well, they're not doing nothing. We have Morgan Stanley and JP Morgan developing their own private chains. They're experimenting with how to use this blockchain technology to more efficiently do things like balance money market investments on a daily basis. So they're playing with their private chains. They're getting things ready. What's going to happen when we are ready to distribute? Because they know they have access to these multi-billion-dollar, trillion-dollar demand for better product. Let's call it less volatile, less stock market-y product. working backwards again. We're at the distribution level. What's going to take us to get there? I'm not sure what's going to get. Regulatory development, yes, we need. We have all the ability to do the other bit. But I think Ami hit on something extremely important. If each one of these distributors is focused on something that we would call as techies a private chain, so be it. There are lots of exchanges in the world. There are lots of different distribution systems in the world. Connecting them is what distributors do. Connecting them is going to be crucial for us to help our clients sell more product. Now, we think that all the administrative and compliance and custodial and accounting functionality that we provide is going to help. Of course it is. But we better be completely aligned with how to talk to the distributors and how to give them the product, or help our clients give them the product that they can sell in place. That's where we're working towards. We are working towards that distribution engine. And when is it going to be? It's not 2023. Like, we aren't even in early adopter phase yet. We're before early adopter. But I can guarantee you the calls that I get or the requests for meetings I have are from C-suites at major general partners, major asset management companies. And they want to know, they don't necessarily pin us down on the when. They want to know the how. Pat, the when is going to come when we can deliver it. And I guarantee you that the demand, if the demand is there, the distributors will tap it. We have to give them a vehicle and a highway and a maintenance system that enables them to satisfy that demand. So, we're all working. 2023 is definitely getting ready. And I guarantee you, every one of the big distribution companies, the banks on down, they are all going full on to be ready as well. Don't know when the dam breaks. It's going to break though.
Yeah. I want to talk a little bit about a couple of your different comments that you made. Everybody, you got a lot of people calling in. They want to know how they're looking at it. You made some comments about regulatory, but we have a lot of big players that are beginning to distribute assets into their own customer base, right? And that can be done today with no regulatory uncertainty at all, right? And Ami, I think that we're seeing a lot of people interested in doing that, right? And let's specifically talk about the exchanges are being set up. We're starting to see little things trickle through them. Some of them more than others, right? ADDX is far and away. They were on our last call. They're the leader in this, right? As far as volume of assets and actual distribution, where they're giving an allocation and they sell it out, right? Other people are getting little allocations and it's struggling, right? And God bless them, they're working it and they're getting started, and we want to encourage that. But ADDX is doing a lot, SDAX is doing a lot, SDX is doing a lot. We're starting to see more things move through, but this internal to an ecosystem itself, a GP to their own LPs, right? A bank to their own private client. Ami, what are we seeing there, and what are you seeing there?
So what I'm saying, and going back to Bruce's comment about when the dam is going to break, we are working on actual projects for deployment in 23 with major financial institutions, especially to do that because they're seeing the supply coming, and they know that there's a demand, and they're selling the demand anyway. They're just selling it manually. But like you said, 23 is not the year of the exponential growth. 20 is the year where we're laying down the bridges, we're paving the roads, and we're launching. Initially small. We have a process where we start with a new organization. We do a hackathon. We bring them for a week. At the end of the week, they see it working. They know it can work. It's amazing. Wow, this is not just fluff. This is real. You move to a pilot, you go to production with one asset, and then you move to scale with another asset. So I think that in this year, we're going to see the deployment across the board with major financial institutions on the one side, and basically from both sides of the market, assets coming in and distribution going out. And there'll be some, I would say, smaller, faster moving. You mentioned ADDX, but others are coming as well, all over the place, who will do some work. I think 24 is what I would call exponential. because the roads are going to be built, assets are coming anyway, and that's where it's going to explode. So we're very busy right now. What I can tell you is that we're in the market of distribution and interoperability. So as long as people were building their first tokenization solution, they didn't see the urgency to work with us because, okay, we have one token, we'll go with that token to my clients and let's just see that it works, right? But the minute they get there and they see how limited they are in terms of distribution, they come to us because they want more. Or you could see a bank, a big bank, they might have 3 different projects within the bank in 3 different departments. One of them is doing this asset class, another one is doing another, another one is doing another, and then they scratch their head. What do you actually give the client? Which platform? Do you register the client to 3 different blockchain, to 3 different platforms? It doesn't work. So they go to us where we bring everything together and we aggregate it and we give the client a single entry point that connects them to all 3 platforms within the bank. But hey, also the 4th platform is from outside the bank and another one and another one. And that's how you build a network, by taking real use cases, real assets, bringing them to market one after the other. And we're now, the people we're working now are the people that are the early movers, the people that are seeing this is coming, have, massive client bases like, Bruce and Chris at Apex, a massive client base that they see is coming. And they're now laying the bridges and the roads for them to be able to drive on, come 24. So that's a timing for me. 23 build year, 24 deployment year, but it's not like it was, we were talking about this market, it's going to come, but it was kind of in the air. I think the difference that you're seeing now is 2 things. One, unlike in 21, where there were kind of visionary people, in 20, when the visionary people were meeting and talking about tokenization, right now, in every financial institution that I'm aware of, there is a digital assets team with digital assets management. That's what they do for a living, and that's what they're gauged on for their success. So that's massive, and they have teams. And the other things that we're seeing is because of the FTX kind of debacle, all of them moved their efforts from crypto, which is ugly and non-regulated, all the way to tokenization, which is basically using technology to automate existing regulations and existing structures, but just doing it better. And I think with those 2 things together, you see why 23 is real. And add to that what I said in the beginning, JP Morgan investing in a company like ours, the CEO of the company talking about it as the future, the trillions of dollars going through repo platforms on blockchain right now, Goldman Sachs talking about it at the Wall Street Journal, and BlackRock as well, seeing it as the future of markets. Everybody's taking, and that's why 23 for me is completely different from before. I can tell you that as a network, 2021, I was pushing up the hill. I was an evangelist, trying to explain to everybody how it's going to work and so on. It's turning. Now everybody's coming to us.
I want to, yeah. And, I remember, Ami, being at conferences with you in 18 and 19, right? And, you got in early, we were here at 16 and just being able to get enough oxygen to stay alive this long, to the point where the secular trend is now behind us and pushing, and they realize that, as you said, once you create this token, we're going to do that. And I do want to, we talked about crypto, and I'm going to throw out a question, and we'll go quickly through everybody real quick. We do believe, or I believe, I should say, that Bitcoin, had, you can argue Bitcoin if you like it or don't like it, doesn't matter. But the point is, it is changed global markets. Full stop. You cannot argue that. The trading 24/7, 365. And we see people want this technology, desires a global market. It desires a non-traditional asset class. It desires access points that are not from 9 to 4 and closed on President's Day, right? They are desiring this functionality that is digital. And so that as we say, how is this moving into the alts space? What does that demand of us from a technology perspective to deliver real estate as a store of value, private equity as a store of value, real estate and infrastructure assets as a store of value? And how does that figure what we need to do from the admin of the token through its cycle, whether it's a fund or an individual asset itself, and how do we do it? And I think, Chris, I'm going to throw that to you first, right? If we're going to see these things trading digitally 24/7, 365 globally, that means we can't use our middleware, can't be a junior accountant and 10-finger automation into Excel, right? What is this demand of you in the administration of the asset?
So yeah, this snowball effect we've seen across all of our digital products, and you've actually seen it all across fintech. Everyone's got a phone in their pocket. Maybe they've got a Netflix subscription. You're used to a really elevated, sophisticated digital experience, and that has accelerated massively, and it continues to snowball. So always being 2 to 3 steps ahead of where you think it's going to be. So the moment you give one thing to a client, so Ami used the example before, they've distributed one fund to their internal clients and they've tokenized it. Well, actually, the next fund, the instant question is, well, can I do this outside? And it's no good that taking another year, or the timeline is just compressed massively. So how do you address it? I mean, fundamentally, it's automation. So we have been embracing cloud. We've been embracing data, and we've been embracing automation in order to make sure that the back-end infrastructure, which is off-chain, right? Let's not, there is not this sort of massive blockchain ecosystem that's going to create the world like, and solve all our problems. A bit like, Bitcoin, everyone thinks it's just out there. In this world, there is still a set of accounting systems, tools, reporting, ingestion layers, etc., which have to happen and will continue to happen for a long time. How do you make sure that they are operating as effectively as possible? If you've got something that needs to be reconciled, it's not a person sitting in an office somewhere, it's automatic reconciliation. That reconciliation isn't happening, and every hour, it's happening live. So how can you make sure that those systems, processes are ready for this exponential growth? Because the expectation, because it is 24/365, is that everything is always operational. You don't have batch process overnight anymore. That doesn't work. If I buy a token, I expect to be able to log into my portal and see the underlying assets that maybe that token for that fund represents. And if I buy that token and I want to access that information, I expect it instantly, because everywhere else I do. So
Chris,
how do we change that?
Yeah, and just cognizant of time, and I want to run through 4 people. That is a desire for instantaneous reconciliation. What is the cash balance today? Where are my risks? How do I do that? And while there is all of the functions, there will be some compute on chain, quite a bit off chain. But in Matt, this gets to what we were talking about, where you commute trust in the data as it changes state through compute functionality and dropping the anchors. And again, it gets to auditability, traceability, right? How much of that is important, and where we're using the blockchain to commute trust, not to do the compute, right? But actually to audit that. And as we think about this movement of data from system to system, how important is it to trust that the data that's being run through the system is the right data that you're intending to have? And Matt, I'm throwing that to you.
Yeah, no, Pat, it's everything, really. If you can't trust the data, then you're not going to be able to trust the results of the data, and you're not going to be able to trust the value of the asset. And so at that point, you won't be a market participant, and that asset won't be liquid. So if you don't have transparency and trust of process, trust of value, and trust of state of that asset, you're not going to have liquidity in that asset. So having that transparency, traceability, and auditability of not just the data, but the workflows and the process to get to the end result is extremely important, and it's an absolute must.
And it used to be that it was a brand. Oh, we use Accenture. We outsource this to Accenture, right? And the trust was in the brand. And now it's the blockchain actually letting you audit the individual calculation and source of data. As those brands, are not going to be as trusted in this trustless environment. Bruce, let me throw it to you, buddy. We've got I'd ask you in kind of 3 minutes or so, as you see how this can impact and change your client, right? We talked about the speed of evolution, the demand for instantaneous reconciliation. We're seeing the source data. What will this mean for the clients that do adopt and don't adopt?
Well, the ones that don't adopt are going to have to play catch up really fast, right? So one of the questions you always get is we're talking about it. They want to know what other people are doing, which, really backs up Ami's point that if they're worried about what other people are doing, they're worried about their competitiveness if they don't embrace the blockchain as the ledger for growing their business, period. So once one or two gets in, we know they all get in. It just happens.
When you talk about your big clients, what percentage of them are talking about this right now, and what percentage are doing something?
Look, we're running. We've got a dozen different test cases, but we're not even really seeing. We're seeing what ifs. We're seeing test cases. Why don't we try listing this private equity fund in Switzerland, knowing full well it's not going to trade, but they have the regulatory environment. Let's test that. So as a percentage, I would say it's less than 1% that are actually doing it. In terms of those that are thinking it and what ifing it and talking about it, most of the major asset managers are having that conversation with us, or I'm hearing with others. But in terms of actually executing, we're not yet physically seeing early adoption in terms of dollar commitment, capital commitment. We're not seeing early adoption yet. We're seeing early adoption in the what ifing. As Ami says, they've all got their own in-house groups now. They're staffing up, they're bringing in expertise. But just imagine making a presentation to your executive committee about how we are going to implement this. And I know how they're going to implement it because I've sat on those committees. I've sat on pension boards. I've sat across from managers trying to pitch their proposals to us. It's going to really require partnership from the main firms like the people on this call and being able to convince them, by the way, if you want to launch this product, we've got your back. We can make sure that it will be compliant, it will be timely, that we will deliver on all the foundations of this liquidity that you're promising people. We have to deliver on that. So we're trying to reduce uncertainty. And our strategy, quite frankly, is we're reducing uncertainty through partnership. We can't nail every technological solution, but we sure as hell can partner with Ownera and with Inveniam and whomever else delivers a key component to our client to getting them successful.
Using just analogy, right? I go back to, 97, 98, and fiber optic was being laid out. And I remember, in New York City, it would be blocked off and you'd have a big truck with a big spool and those guys were running it, and you'd go out and you'd see the guys digging the trench, laying the fiber optic, and, actually delivering the cable everywhere that it needed to be was the precursor, as the industry said, and the funder said, we're here, let's go. But we now need that glass everywhere. And it took years to do it. And I remember the traffic jams, whether it was in Boston or New York or wherever it was, right, as they were laying that cable. Some people are laying cable already. Some people are saying, if I lay cable, what will happen? But we're not seeing huge amounts of transmission on the lines. But I got to tell you, there's not a single person that I talk to in our large clients who doubt that this is happening. You know what I mean?
No.
There's no question, right? When you get the Netflix example, right, where they said we can't build a single monolithic solution, we have to decentralize, we have to create a micro solution set so that they can handle what they knew was coming, which is today 2 billion pulls a day. But if they had a single thing that had to be 100% up and there was no fail capability, they would have failed. But instead, this creation of a solution, which is the future of DeFi and the future of traditional markets in a DeFi environment, right? All the components in the ecosystem performing those functions. And I want to maybe throw it to you, Ami, as a last word, right? as we see this, where tech is coming in and these major firms are doing this, I get a sense of inevitability, right? But where do you put us? I heard you say 23 is going to be a pivotal year for us, right? What does pivotal year mean? You talked about 24, 25. We're not going to see, trillions of dollars trading for a couple of years. But what are we going to see traded, and where are we going to see it traded, and where are we going to see kind of these early incarnations a reality? What are we going to see?
I'm not sure that we're not going to see trillions. It's just not going to be in the market that you expect. Specifically speaking, one of the first things we're working on is the repo market. And that's a market that connects inside banks and trades and so on. That's a market capable of doing significant volume. As we've already seen, there have been some press releases lately from several companies that are trading, these volumes on a blockchain. But on the private markets, it will take more time, and it will be billions this year, and it will be scaling up next year. Again, as I said, this year we're building it, and I think that it's exactly like you said. Once it's built and it's there, you can run. It has no limitation. You can run whatever you want on it, so it can scale very, very, very quickly. That's one thing. But not only the road that you built is going to scale, but competitively, everybody else looking at it and saying, oh, these guys deployed, my biggest competitors deployed, I can't be left behind. And that's exactly what we're seeing. We're seeing people that are saying we're going to be first to market. We're seeing people are going to say we're going to be fast followers. So we're going to go very, very quickly. And all those people that, I was taking calls with, big banks, big distributors. I was taking calls with 6 months and it wasn't real. Right now, they're asking the same questions. What are others doing? And when they will see what others are doing and we deploy it, starting Q2, they will want in as well. There's no there's no doubt in anybody's mind that this technology is revolutionary. But it's hard to do. It's not easy. So people just want to do it at the right time, with the right resources, when the technology is mature enough. And I think that's where we are now.
I think that's exactly right. And the people who have been building the tech, who have the functional technology that works, we're seeing in our ecosystem the differentiation between the PowerPoint engineers and the software engineers. You know what I mean? And people, the ones that have real functionality, the inbound calls are epic at this point, right? We're feeling that secular trade, just kind of transition, I guess I should say.
So I think we are in a position now, after 2.5 years of building this, that I can go on a call with the CEO of a private bank. He will describe to me what is kind of an ideal scenario would be in terms of tokenization and what he can do in terms of distribution for his clients, and then I can turn on my demo and show him how it actually works. Because we're there.
That's exactly right. That's what we're seeing as well, guys. I want to thank everybody for being on this. Jean Charles asked a question about what steps can universities and other educational institutions. I have to tell you, the universities that are having the symposia right now, Duke did a great one, right? That I watched in part of it, right? MIT has brought in a lot of great people. Michigan State. I'm speaking at Notre Dame this Friday, or I guess next Friday, right? Where they're hosting these symposia on the evolution in the capital markets. And I think this is what we're going to see as they're bringing these folks in. And I think that's what we're going to see next. But I want to just, again, thank everybody for doing this. The industry is moving fast. And for it to move fast, it needs digitization in middle office. It needs source data. It needs price discovery. It needs to be able to interconnect. It needs to be interoperable, right? It needs distribution, and they need trusted partners to help them get through and navigate this quantum leap, right? It's not just a little evolution. This is changing, from paper to digital, effectively, right? How much work are you transcribing from one doc to another where there's a human doing 10-finger automation? That's going to be removed. Data is going to be pushed through computational systems on demand with auditability, traceability, and visibility. Chris, I turn it over to you, brother.
Gentlemen, thank you. Appreciate all the great insight, and thank you for your time today. I want to remind everybody, please share this with your colleagues. And also next Thursday, we'll be back here again, February 16th, again next Thursday. So be sure and join us here again for our next webinar in this webinar series, the tokenization of security assets. Thanks. We'll see you soon.
Thank you very much.
Thank you.
Bye-bye.